If you're somebody who often finds that they recognize trade opportunities as they're playing out, and then you're always slightly behind the ball playing catch up with the market and chasing trades, then this vlog episode is for you. What we're going to discuss today is 3 key things that you need to know in order to recognize and find trade opportunities before they start to play out. The first one of those things is understanding where the market's strengths and its weaknesses are. The second thing is understanding the landscape that the market's in. Or in other words, understanding what's coming up. So this could be, for example, like events or kind of like some important fundamentals or something like that that's going on in the market that could potentially drive trade. Then the third thing is understanding where the market is. Okay, and if we understand all of those things, then we should be able to identify trades before they happen. And that just takes a little bit of thinking in advance and putting those things together and seeing what you can come up with. Okay, so I'm going to take you through an example of this from this week that should hopefully help you understand what I'm trying to say. Now, before I take you through that example, I just want to say that if you're interested in learning more about how I put trades together and how I understand the market, then you should go and check out elitetraderworkshop.com. Now this gives you the opportunity to sign up to a free seminar run by Axia Futures, and it gives you a bit of a taste of what goes on. Now there are a lot of training courses at Axia, that's how I started. So if that interests you, go check it out, highly recommend it. That was elitetraderworkshop.com. Okay, now let's go to my charts and I'm going to walk you through an example. Okay, so now for an example. So we have a market here, and this market is the bund, but it could be the S&P or gold or anything. It doesn't really matter. The point is that you just understand how I talk about the structure. Now this market's been weak. It's done a bit of sideways. It's then popped the highs of that block and failed and has now come back down. So that's giving us this bearish bias. This market's showing us it's bearish. However, there's the strong low down here. So we can't just try and sell through this low. Or we can, but it's not got great odds. So that's number one, understanding what's strong, and this low is strong. Now, number 2 is understanding the environment we're in and what's coming up. Now, what's coming up is that today is month end, and then also the fact that we have ECB next week, and ECB will have to decide on purchases for Q4, the pace of purchases. So that's really important. So the fact the market's offering us could be telling us something significant, and it's offering with good volumes too. So that's aligning. Then the third thing is knowing where the market is. Well, this market's been offering and it's at the lows, so the market's probably short. So 2 things we need to see. 1, we need to see it spend some time down here making this low not strong. The second thing it needs to do is get the inventory flat so that it can offer a gain. Now, if we go and look how this actually played out and merge this together, you can see this market came, rotated the lows, it spent time getting flat, it squeezed once, which then enabled it to go down. So after you've seen this time at the low offering out there, you've seen the squeeze, the market's now flat inventory, the low is now weak, and then all you need to see is volumes through the low. And just like that, you've put together a trade by understanding those 3 things.